Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's the big day today, March 9th, and I hope you guys have a wonderful upcoming weekend here, and happy Friday. So let's jump right into it. So the big number is the jobs day. We had the non-farm payrolls from the Bureau of Labor Statistics, or BLS, for the month of February. So in the month of January, we had a revision of this. It was increased from 200,000 to 239,000 for the month of January. Now, also December was risen 160,000 to 175,000. So that gives us additional 54,000 new jobs created for the month of December and January. Now, forecast for February is supposed to be kind of in the same range, in the lower 200,000 at 225,000, but came in a whopping 313,000 new jobs created. This is obviously a very huge number and uh, great number to see here. Now, we also got the unemployment rate here for the month of February. So the last reporting came in at 4.1%. It was projected to dip a little bit down to 4%, and it remained at 4.1%. Now, why is that? We got basically the household survey came in at 785,000 new jobs created. However, the labor force grew by 806,000, which gives us basically a participation rate of 63%. So basically, with the labor force having a similar number, it kind of remained the same. So that's why we had the same, the unemployment remained the same here. Now, also on the 8.2 U6 number, unemployment came in at remained the same at 8.2%. So good numbers right there, what we're seeing so far. Now, here's the biggie. We got the average hourly earnings. If you recall back in January's numbers, this is really what kind of set the markets apart. This is where the stocks got really started panicking when we had the $1,000 drops on the Dow, probably because there's wage inflation here. So take a look at this. We had in January at 0.3% increase, which brought us year over year to 2.9%. The forecast was supposed to go up 2.2%, and it only came in a modest 0.1%. So that brought our year over year from 2.9% down to 2.6%. So in a perfect world for the stock market, this is it. We had a lower inflation number and high jobs number. This is obviously a very good news for the stock market, and this is why as you'll see here, oops, sorry about that, stock market is up. The Dow so far this morning was up about 173, taking the news quite well here. This is on heels of the news, I think late yesterday, it came out that Trump accepted an invitation to meet with the president of North Korea. So that might take some place in May. So there's hope and optimism that something come up. Hopefully there's no stringing along or bluff there, but it sounds like some progress could potentially be made in relationships with North Korea, as it sounds like maybe at least some dialogue might be created between the two here. Also, the tariffs were released yesterday by Trump. Now, the stock market rebounded a little bit after they saw the tariffs, which will allow some exemptions to be allowed in there. And that's probably where you're going to see the Canadian and the Mexico exemptions in there. So it kind of left open for possible exemptions in there. And basically, it looks like it's a tool to utilize for trade negotiations with different countries here. And this is obviously where he feels he's going to get a good start on the steel and aluminum side of things. And I think, if I remember right, it looked like it would be a sliding scale with different countries. So some countries could have a little higher tariffs, where other countries could have a little lower tariffs as well. So to move it along, let's take a look here at the bond market, see what's going on. Sorry about that. Bond market, here we are. The bond market is down, but because of that wage-based inflation going down, we probably would have been really down a lot further. So right now we're down about 19 basis points from where we left off yesterday. So here's this point where we left off yesterday, and we dipped all the way down to about here. We were up about 19 basis from here to here yesterday. So right now we're down about 19 basis points, 16 basis points so far this morning. Now, that was actually from here to here. It was 19 basis points. So it was still kind of the same range. So we've been kind of going the sideways pattern. We got the 25-day moving average coming down. So we're in between that as our ceiling. And we got this floor of resistance at the 101, 8.91. So rates, of course, for the most part have decreased, or I mean, went up a little bit as a result. But again, we're in the sideways pattern. Now, here's something to kind of keep an eye on. Is here we got the treasury yields. As you can see, we are testing the floor, the ceiling of resistance here at the 2.908 level here. So we're up to about, almost, let's say rounded off at 2.91% yield. But right here we got the 25-day moving average, which has been a floor of support for it, rising here. Now, within probably sometime next week, we're going to see basically these are going to merge here, the ceiling resistance and the floor of support. So it's going to push yields one way or the other. Because we've had this kind of, this trend line going upwards with yields rising, I would suspect that it would continue to rise and break above this at some point, being forced to break above it and rise up to the 3.04. So we may see that coming up soon with yields rising. Of course, so that basically takes away bonds. The mortgage-backed securities, what that means is they're going down and then rates are rising. So just be on the caution here that you could see that breakout within probably next week here or very soon here. All right, so that pretty much wraps things up. Rates are a little bit higher today, but it could have been much worse. We could have seen a lot more of a rate drop. Now, it could continue to happen later today, but so far this morning, it's been a little bit more modest or mild than we probably were originally expecting, because that wage inflation is really the big thing. So we had the perfect storm here. Great jobs numbers and low inflation on there. So good overall day here for us and heading into the weekend here. So if you guys want to get more updates, just come over to Twitter. You can find me at Mike Bjork. I post throughout the day here different updates on the data, what's coming up, and the market here. And otherwise, I hope you guys enjoy your weekend, and we'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.